Hi friends, welcome back to FinveStocks. Warren Buffett once said, "Be fearful when others are greedy, and greedy only when others are fearful." What does it mean? Normally, when stock starts going up, we start buying because of FOMO. FOMO is fear of missing out. And when it starts crashing, we will be in loss, and seeing the loss, we will exit. So we are buying at high and selling at low. Actually, it should be the other way around. One should buy when the stock is down and exit when it reaches high. It is not easy as being said, right? One needs good amount of courage and experience to buy the stock at dirt cheap rate. For example, 1.5 years ago when Bajaj Finance was trading at less than 2000 rupees, that time all were scared to buy the stock, thinking that it will go further down. When in fact, that time some brokers were suggesting Bajaj Finance will be going below 1500. And currently, when Bajaj Finance is trading more than 8000 rupees level, people are confident and buying in good quantity. Should understand the fundamental of stock for getting conviction to buy the stock. So market crash is the good time to generate good profit. So one should buy the stock at various levels at different support level so that he can average out and get a good value buying. If you didn't see our earlier video, kindly do watch the earlier video where we explained growth stock for 2022. In our last video, we saw 7 growth story which can create wealth in near future. In today's video, we will see 2 more stocks which can create wealth for a long-term portfolio. So stay tuned. The next growth stock on the list is an electronic manufacturing service firm. It is also a key beneficiary of PLI scheme, Production Linked Incentive Scheme. Dixon Technologies. Dixon Technologies Limited is the largest design-focused and solution-based company engaged in manufacturing of consumer durable products such as lighting, consumer electronics, mobile smartphones, etc. The contract manufacturer is undertaking capacity expansion in some segments, launching new products and eyeing export markets. Dixon Technologies product portfolio includes consumer electronics like LED TVs, home appliances like washing machines, lighting products like LED bulbs, tube lights, mobile phone and smartphones, CCTV, medical equipments, etc. Dixon also provides solution in reverse logistics, that is, repair and refurbishment of mobile phones, smartphones, LED TV panels, etc. Dixon is the biggest manufacturer of LED TVs in India, producing TVs for brands like Samsung, Panasonic, TCL, OnePlus, and many more. They are also manufacturing lighting products for companies like Philips, Havells, Siska, Bajaj, Wipro, Orient, and more. They happen to be the leading contract manufacturer of semi-automatic washing machines for clients like Godrej, Samsung, Panasonic, etc. And also they are into the business of manufacturing mobile phones and security systems. To talk about the business model of Dixon Technologies, the company operates on two models. One is original equipment manufacturer, that is OEM, original designing manufacturer, that is ODM. In OEM model, they simply assemble the products based on customer specification. Whereas in ODM, they will produce the product from scratch, including the design and selection of raw material using its own R&D. Dixon is a major beneficiary of PLI scheme. PLI is Production Linked Incentive Scheme. Padjet Technologies, a wholly owned subsidiary of Dixon Technologies, received permission from Government of India under Production Linked Incentive Scheme for manufacturing mobile phones. It will give a good revenue boost for Dixon Technologies. For Dixon Technologies, majority of the money is coming from consumer electronics, that is approximately 48%. Then comes lighting solutions with 26%, washing machines with 9%, mobile phones contribute 12%, and CCTVs and DVRs contribute 5%. If you see the product mix, Dixon Technologies started with color TVs in 1994. Then they entered into LCD TVs in 2007. They started CFL lighting and reverse logistic in 2008. Then comes LED TVs and washing machine from 2010. They entered into mobile phone manufacturing in 2016, and in 2017 they started CCTV and DVR. In 2021, they started producing medical electronics, set-top box as well as wearables. If you see the overall revenue mix, 54% of the revenue is coming from LED TV manufacturing, 24% from LED bulb, washing machine contributes 11% and others contribute 11%. If you see segment-wise breakup, consumer electronics contributing 59.6% of the overall revenue, whereas lighting products contribute 17.1%. Home appliance contribute 6.7%, whereas mobile phones contribute 13%. Security systems like CCTV, DVR contributes 3.4%. Majority of the profit is coming from consumer electronics and lighting products. Consumer electronics contribute 35.9%, whereas lighting products contribute 34%. Then comes mobile phone with 13.8% and home appliance with 13.9%. Security systems contribute 2.1%. Now let's see the financial parameter of Dixon Technologies. Dixon Technologies is having a market cap of approximately 27,000 crores. Currently, the stock is trading at a price of around 4,500 level. The PE of the stock is around 145, which is high compared to the industry standard, which is around 125. The book value of Dixon Technologies is around 140 rupees and dividend yield is 0.02%, which is very low. So Dixon Technologies is not a dividend yield company. It is showing very high ROCE and ROE. ROCE is around 32.8%, whereas ROE is 25%. ROCE shows the company's efficiency to generate money from the capital employed. Face value of the stock is around 2 rupees and price to book value is around 32. The company is having a debt equity ratio of 0.35, which is okay. Company doesn't have any pledged shares. The interest coverage ratio of Dixon Technologies is around 8.5, which is very good. The company is having a cash equivalence of 176 crore, whereas free cash flow is in the range of 2 crores only. The company is more concentrated on capex. That is the reason why it is showing very low free cash flow. If you compare the sales growth and profit growth for last 5 years, it is showing very good. Sales growth is in the order of 35.9%, whereas profit growth is in the range of 35%. If you see the financials over the years, it was generating a revenue of around 726 crores in 2013, whereas currently it is generating a revenue of 4,405 crores, which is huge. If you see net profit over the years, in 2013 it was generating around 2 crores, whereas currently in FY20 it has generated an overall profit of around 120 crores. The company has generated good revenue growth of approximately 25% CAGR for past 8 years. If you see net profit growth, it is around 67% CAGR for past 8 years. It is very high. The company able to generate huge profit from the revenue is because of high operational margin. So they had improved their efficiency to generate more profit. Now let's see the latest financial trend and shareholding pattern. In past 4 years, company has generated around 23% CAGR in revenue growth, whereas it has created 28% CAGR in profit growth. If you see in 2018, company has generated 2,850 crores revenue, whereas in 2021, it has generated a revenue of around 6,450 crores. If you see the profit, in 2018, it has generated 60 crores profit, whereas in 2021, it has generated a profit of around 160 crores. If you see the shareholding pattern of Dixon Technologies, approximately 35% of the shares held by promoters. Mutual funds hold 8.1%, whereas FII hold 18.4%. If you consider others, including retail, the holding is around 37.9%. If you see return over last 1 year, company has generated a return of around 65.5%, which is very good. Now let's see some good entry levels for Dixon Technologies. Currently, the stock is trading in the range of 4,500, which has quite corrected from 5,500 level due to the recent market fall. Currently, it is showing some good support around 4,358. So, if it holds to that support, it can bounce back. If it is not holding 4,300 level, it can fall back to 4,000 level, where it's a good entry point for long-term investing. One can start accumulating at current level also, as currently it is trading in a good valuation. Once it crosses 4,600 level, it can fly back to 5,000 level, and again it can move to 5,300 levels. The next growth stock on the list is a NBFC company, a non-banking financial company which is engaged in providing loan against collateral of gold jewelry. It's Muthoot Finance. Muthoot Finance is engaged in the business of diversified interest in the field of financial services, healthcare, real estate, foreign exchange, information technology, education, insurance distribution, hospitality, etc. Their main products are gold loan, housing finance, personal finance, insurance, gold coin, money transfer, and foreign exchange. Now let's see some of the key subsidiaries of Muthoot Finance. First one is Muthoot Home Fin. Muthoot Homefin involved in housing finance with a focus on lending to lower income group customers from the economically weaker sections in Tier 2 and Tier 3 locations. The next one is a microfinance company named Belstar Microfinance Limited. Belstar Microfinance Limited is involved in microfinance lending, having a strong branch network of 619 branches spread across 17 states. The third key subsidiary is Muthoot Money. It is a wholly owned subsidiary involved in vehicle finance. Next one is Muthoot Insurance Brokers. It is involved in distribution of life and non-life insurance products of various insurance companies. And the last one is Asia Asset, which involved in retail and business financing with more than 40 branches. Now let's see the revenue mix of Muthoot Finance. If you see product-wise breakup, majority of the income is coming from interest. That is approximately 98.4%. If you see the loan breakup, majority of the revenue is coming from gold loan, which is around 91.1%. Housing loan contribute around 2%, whereas vehicle loan contribute less than 1%. If you see the location-wise revenue breakup, the whole revenue is coming from India. They don't have any presence outside India. If you see the borrowings, 78.8% is coming from India. 21.3% borrowing is from outside India. Now let's see the financial performance of Muthoot Finance. Muthoot Finance is having an overall market cap of around 57,000 crores. The current price of Muthoot Finance is around 4,450 rupees. The stock is trading at a PE of approximately 15, which is very low compared to the average industry PV. The average industry PE is around 27. The current book value of Muthoot Finance is around 400 rupees. It is having a dividend yield of 1.4%, which is very good. It is having an ROCE of 15.8% and ROE of 27.8%, which is very good. The face value of the stock is 10 rupees and price to book value is around 3.5. The company is showing very high debt to equity ratio of around 3, which is normal for a NBFC company because their majority of the business is running on debt. The company doesn't have any pledged shares. The interest coverage ratio is around 2.38, which is okay. The company is having a cash equivalence of around 7,800 crores. It is showing a negative free cash flow because of lending and borrowings. If you see the sales growth of last 5 years, it is around 16.7%, which is good. For last 5 years, profit has grew by 35.7%, which is very good. Now let's see the financial trend and shareholding pattern. If you see the revenue pattern, in 2018, company has generated around 6,780 crores, whereas in 2021, company has generated an overall revenue of around 11,570 crores, which has grown approximately 14% CAGR. In terms of profit, company has generated 1,830 crores in 2018, whereas in 2021, it has generated an overall profit of around 3,800 crores, which has grew by approximately 20% CAGR, which is very good. If you see the shareholding pattern of the company, 73.4% is with promoters, which is very good. Mutual fund holds 7.1%, whereas FII hold 13.7%. Shareholding with others is only less than 5%. If you see return over last 1 year, it has generated a return of around 22%, which is very good. So which is a good level to enter for Muthoot Finance. Some of the good levels to watch for Muthoot Finance are currently the stock is trading in the range of 1400 to 1450, which is a good support zone. If it takes support from this zone, it can go up to 1600 level. Once it breaks 1600, it can touch maximum of 1700, which is the previous high. If it breaks 1400 range, the next support is around 1300 range, which is a solid support. So one can comfortably start buying at current market price. Currently, RSI is also showing weak. So one can wait for RSI to strengthen. Once the RSI cross 50, one can comfortably get into Muthoot Finance. The next immediate target for Muthoot Finance is around 1600 range. Once it breaks, it can move to lifetime high of 1700. Till now, we covered 9 growth stock for year 2022. I don't want to make this video too lengthy. So in our next video, we will see the last growth stock along with the bonus stock. Also, we will mention the surprise in the next video. If you wish to join our WhatsApp group for information sharing related to stock market, you can WhatsApp me in this number. This group is only for information sharing and not for tips. All these buying levels discussed here are just for educational purpose. Consult your financial advisors before purchasing any stock. I am planning to make a series of swing positional stock ideas with fundamentally good companies, which will be released on a regular basis. So stay tuned so that you will not miss that. If you are not a part of FinveStocks family, don't forget to subscribe so as to get a regular update. If you like the content and analysis of this video, please do share and like this video. Also, don't forget to subscribe the channel. Please don't forget to post your messages on comments. Which stock you are planning to buy at current levels. Also, do comment which stock you wish to see the detailed analysis. I'll definitely do it for you. Thanks for watching and have a good day.